Will an auditor make sensible recommendations about cost benefit of unwise expenditures? For example, many schemes spend more on annual taxation compliance than they earn in non-mutual income, instead of shifting funds into non-interest earning accounts and negating any obligations with the ATO.
I'll break the question up into two pieces. The first one is no, it's outside the scope of the audit engagement to make recommendations on unwise expenditure. I mean, just like the shareholders of BHP appoint the directors of BHP to run the company for them, the owners appoint the committee to run the affairs of the owners corporation on their behalf with the help of the agent. So if, again, getting back to my presentation, if they decide to paint the fence green instead of painting the fence black, that's their decision to make, and it's not really in the scope of the audit to question whether the fence should be green or black. To the second part of the question, I agree, especially with record low interest rates at the moment. It's often very little benefit of receiving $2 or $3 in interest in a interest-bearing account, and then having to pay a tax agent to prepare a return. But you need to also be mindful that interest is not the only item of assessable income for an owners corporation that triggers the requirement to lodge a tax return. Remember, an owners corporation is taxed as a company. And so as soon as that company earns $1 in assessable income, you have to prepare and lodge a tax return. But I do sympathise with the point. The other thing you need to be mindful of, and we see this a lot, is that everyone thinks I don't have any assessable income in my owners corporation, therefore I don't have to lodge a return. Tick, that's correct. However, where a return is not lodged at all, what happens is in 2, 3 or 4 years, and sometimes 19 years later, the commissioner writes to the current tax agent to say your 2002 income tax return remains outstanding. I am now ordering you to lodge a return, even if it is nil. And if you don't do that within the required time frame, the commissioner fines you $900 per year.
Per year.
So what we do as part of a service to make sure that it's complete is we lodge what's called a CU form or a client update form. So yes, if you need to lodge a return, we lodge a return. But if you don't need to lodge a return, we tell the commissioner in that year that you don't need to lodge a return, so that you won't get those letters in 3, 4 and 5 years saying, I'm now directing you to lodge a return.